take a break and kind of talk to you guys about tilt and burnout in trading, because I think it's an extremely important topic. So before I get into that, let's take a little quick look at the villa that we're staying in. So we've got our own private villa here in the Caribbean. So we got a nice piano over there. Kind of a straw roof. Not exactly sure what they call that, but. And then back here, we've got our own private deck. So we got a hot tub, a day bed, a couple chase lounges, nice little area here for breakfast. And man, look at that view. Look how clear the water is. So let's talk about tilt and burnout in trading. And I'm going to talk to you guys just from my experience being in the markets for the past 14 plus years on what causes tilt and burnout and how to possibly combat it, right? Because I don't think you can avoid tilt or burnout. Now, first of all, let's talk about burnout. So when you first get into trading, you basically don't know anything. And it can be extremely daunting because when you sit down and you realize like how many different skill sets that you need to build, each one of those skills takes an extraordinary amount of time. We're talking about technical analysis, risk management, trade management, psychology, fundamentals. There's so many different things that go into profitable trading that not a lot of people talk about. The problem is that when new traders come into the markets, they want to try and learn everything all at once. So they end up spending crazy hours studying different things. They're trying to trade every single session, Asian session, London session, New York. Then they're trying to trade the rollover, the PM session. It's like it never stops and it never ends. And once the market's closed, or maybe it doesn't close, right? Maybe if you're trading futures or Forex, the markets don't close. So you're trying to study while staring at the live markets. Think about trying to learn all these different things at once while you're staring at the live markets and you really don't know what's going on. You're going to spend an extraordinary amount of time basically walking around with your head cut off because you don't know which direction to go. You don't know what really creates profitable traders, and you don't know the processes that they use in order to become profitable. So many times it leads you down a rabbit hole of searching for new things and new information to add to your strategies. Maybe you've learned a simple strategy, and then somebody else is telling you, hey, you should learn this. Or something online is telling you, hey, you should learn this. And then it ends in this constant loop of you seeking new information all the time, thinking that it's going to add this holy grail edge to your trading methodology, when in reality, it doesn't do anything like that. It adds more confusion, it adds more complexity to your trading, and it's hard to execute on those specific ideas because you don't know them intimately. Now, I'm speaking from personal experience because I went through that same process. I went through, a period of 5, 6, maybe even 7 years of hopping from system to system, thinking new indicators and new strategies would really add the edge to my trading. And I would stay up countless hours. So I worked a job, all right? I was working pretty late hours. I was going to school at the time. It was a lot to juggle. And for a lot of you out there that are trying to make trading, your full-time gig, and you don't have the savings required for you to be able to go full-time, right? You're going to be juggling multiple things in your life. And whether that's a 40-hour, 60-hour work week, whether it's you have kids, whether you're taking care of somebody else, or you have a significant other that requires your attention, some of these things kind of get in the way of you becoming a profitable trader because you just don't have enough time in the day to dedicate to proper study. And what my dad used to say is, I basically used to half-ass a lot of things. So I would not put 100% of my dedication towards something and actually, build the proper foundation to make something successful or to become successful. So what I would do was, kind of just dip my toe in here and there without really mastering some specific skill set. Now, when you're trying to learn so many things all at once, you don't retain a lot of information. Okay, so if I go out and I try and learn technical analysis, but at the same time I'm trying to learn fundamental analysis, well, I'm not really retaining as much information as I possibly could if I were to just focus on one specific thing. So because you don't know exactly what you're doing, you're trying to
Order
absorb
filled.
all the information all at once because you have an unrealistic timeline of how long it's going to take you to become profitable. Now, yes,
Order
you
filled.
possibly see me sitting at this nice villa, beautiful blue waters, very tranquil, it's very quiet out here. But I want to tell you guys that this is the result of, 14 plus years of experience. When I first started trading, I was pretty much broke. I was, a dropout from college, came home, didn't know what I was doing with my life.
Order
My friend got me
filled.
into trading, didn't have any money, right, because I didn't have a job, and I was trying to make it work. But the reality is that this is a marathon and not a sprint. So, when you're trying to build these skill sets, you have to have somewhat of a realistic timeline. And I think the biggest problem with traders is that, you see on social media, and I think social media is a good thing, right? I think there's a lot of great educators in the space now that are actually teaching people how to trade. Because when I came up in 2011, trading YouTube wasn't really a thing. People weren't streaming live executions. You couldn't see them operate in the markets real time. That was not a thing. All I had were text-based forums and images, all right, so screenshots. And while I was working a job, that stream of information was extremely slow. So I could not stay up to date with whatever was going on in the market. I would basically hop on the computer, see somebody take a trade that happened 3 hours ago, and then I would hop into the same trade. I missed the fill price, and then the trade went against me without realizing that I completely missed the fill price. Like, the risk reward was not favorable when I got in the market. So I think there's a lot of advantages to the current social media age, but there's also a lot of disadvantages. There's a lot of distractions. You see a lot of traders that some of them don't even trade. Some of them make a lot of money from selling courses and programs. For me, I trade. I also make money from selling a program, but it's a mentorship, and I'm sharing my experiences with a lot of my students. And recently I'm bringing this topic up because I see a lot of traders trying to put their foot on the gas, and after a month of negative 18% to positive 16%, right, that's a massive volatility spike in the index markets. And what a lot of traders will do, or if they haven't experienced this yet, is after a hot streak in the markets, a lot of them tend to give the money back because they believe that, because they're on a hot streak, that hot streak can continue. But the reality is that markets have cycles, okay? Markets go through hot periods, they go through cold periods. There's different macroeconomic factors that come into play where sometimes markets are just sideways for a very long time, and then when they break out and they trend, right, there's a theme and a sentiment behind why a market is moving a specific direction. But if we've already kind of, exploited some of the headlines, and we've already seen some of the volatility from, different discussions, whether it's tariffs, whether it's a global conflict going on, a lot of times those periods, once they settle down, those are the periods that are extremely tough because inexperienced traders think that the volatility is going to stay around forever. Okay, you saw it in GameStop when COVID happened, right? There was a ton of volatility, and then the markets kind of just die, and then they drift lower and lower and lower while people are just holding their bags forever because they don't have an exit strategy. They haven't been in a bear market before. They don't know how to manage their risk, manage their emotions, and they believe that, the previous hot streak that was provided to them is going to continue. And that really just comes by way of experience, okay? This is really the school of hard knocks. So I've been through the periods where, I was running an account up pretty heavily, right? When oil went negative, when the Fukushima power plant explosion happened, I was trading the yen. There's so many different economic events that I've traded through. Brexit was another example. There's a lot of volatility that comes into the market based on headlines, but then at some point the headlines kind of die off and it becomes old news and it becomes a stalemate almost, right? And there's a stalemate in the markets where maybe the same headlines that are coming out is not driving sentiment as much as it did because we already know about tariffs, right? We already know that there's tariff talks going on. So a lot of this information gets priced in, and when the information gets priced in, the markets don't respond the same way to specific headlines. And that's what a lot of new inexperienced traders don't realize, is that you need to know when to put your foot on the gas and when to take it off. And what happens is, maybe you're studying, you see something work for an extended period of time. It could be 2 quarters, right? You've studied the strategy, you learned a little bit about fundamentals, you learned a little bit about psychology, and you're trading one specific market condition. And then that market condition ends. And what happens is that you think it's the system, when in reality, it's just the market condition. And what a lot of traders tend to do is they tend to just hop to something new because they think that they need to adapt, right? When we talked about adaptability in the markets, a lot of people misconstrue that with adapting by learning more information and more knowledge. And in my opinion, when you're trying to adapt, it's more about, when do I sit still on the sidelines? When do I stay in cash? When do I size up? When do I size down? Those are the important aspects of trading that nobody really talks about, but it's all understood by all the professional top traders in the world. They know when to size correctly. They know when to take their foot off the gas and just sit in cash. Okay, look at somebody like Warren Buffett. He's mostly a long participant, so he's mostly buying stocks, and he's not always trying to be in the market. He's trying to navigate the different market conditions. So towards the peak of the all-time high on NASDAQ before we got this nasty crash, right, he was moving towards bonds. Okay, and in my opinion, bonds is very close to a cash position because they're secured, they offer you a guaranteed return, and it's backed by the U.S. government. So there's not a whole lot that he has to worry about. So it's essentially a non-position. He's not long on the market. And what a lot of traders don't understand is that they see people on social media, they see other people doing really well in specific market conditions, and they think they can replicate that because when I was coming up, that's what I was trying to do. I was trying to replicate the best traders, and I would see some traders trading every single day. But I realized very quickly that that doesn't really suit my personality because I have a tendency to size up when I'm pretty confident, but when the conditions go away, sometimes I'm still too sized up. Like I'm trading too big of a size when the market is not really providing those same opportunities that I saw previously. And that led to major drawdown periods, okay? It led to me thinking I needed to add more things to my system. So all in all, this all leads into burnout and tilt. So when you're tilting, you're going deeper into burnout stages because you are probably lacking sleep, your emotional volatility is all over the place, and at times it just feels like you don't want to continue trading anymore. And that's the importance of this specific lecture, is that sometimes we just need to be able to step away from the markets and reset and recalibrate and just get back in sync with our processes, things that we know work. And sometimes it's just about sizing down. So I've been having some discussions with some senior traders that have been around the markets for a very long time. And a lot of these senior traders, they just understand that, when you're running bad and you're on tilt and you're going through burnout stages, there's nobody forcing you to trade. There's nobody saying you need to show up to the desk and place risk and, take your normal position size in order to survive in the markets. And that's the biggest key, is surviving in the markets. Okay, if you can survive in the markets, the money will come eventually. The biggest key is to be able to size down appropriately, where you still feel like you're active, and you still feel like you're getting experience and reps in, and you still feel like you're in flow, but not to the point where if you go in a drawdown, it's going to put you on tilt. And sometimes for me, that's just completely stepping away from the markets and not trading. So the past 2 weeks, I think I've taken 2 trades maybe. Both of them haven't worked out. So typically, if they did work out, I would continue trading. If not, I'm sidelined and I'm trying to do something else. And for me, I'm having this discussion because I haven't taken a break for myself in a very, very long time. And the thing with a lot of traders is that they think that if they're not trading every single day, that they're not improving. And I'm telling you guys from firsthand experience that when I tried doing that, it actually stunted my growth. So I wanted to basically choose volume over accuracy, right? Shotgun method versus sniper method. And the problem is that you're not choosing quality setups. You're just trading to trade, right? You're trading for activity. You're trading to get your dopamine going. And the truth of the matter is that the best traders in the world wait for select opportunities. They're not in there every single day risking full size all the time. Now, yes, you can do it for extended periods of time. For me, I did it for 3 months straight, but now I'm feeling the effects of it. And What a lot of people don't talk about also is the mental capital required to trade at peak performance for extended periods of time. Because it's so easy to just turn up to your desk, click a couple buttons, and now all of a sudden you're in a full-size position. Maybe your sleep quality's gone down. Maybe you're on a losing streak. Maybe you're just not mentally there. And I think it's so important to understand when you're in a flow state versus when you're not. And when you're not in a flow state, you often go on autopilot and you do things that you shouldn't be doing, but you're doing them anyway. Like, I have so much experience when I tell myself, hey, you know what, I'm only going to take one trade today. And then by the end of the day, I found myself in 10 plus losing trades, all going separate directions, right? I was long, short, because I just didn't follow the process. Like, maybe I was extremely tired. Maybe I didn't really run through my daily journal from the day before. And maybe I just wasn't aligned with the processes that make a profitable trader. So for me, there's a couple different things that I do to combat burnout and tilt. The biggest thing is to take breaks and take them often. And I honestly wish somebody told me this sooner in my career, is that you don't need to be at the markets for 250 days out of the trading year. Okay, you can sacrifice a couple weeks here and there because it's gonna do so much good for your performance that you're not really gonna realize it because it's not as tangible as people think. Let's say even if you take a break, there's no guarantee that the next trade that you place is gonna be a winner. But you will notice small things like your mental health is better. You can take losses more easily. You can follow your processes more easily because you're not burnt out from sitting in front of the desk, just placing trades randomly. And that's the biggest thing that people need to understand is when they're trying to disconnect from the outcome of every single trade, they have to not tie their self-worth to the P&L, okay? If you take a loss, it can be a very good loss. If you followed your rules, you followed your processes, and you followed your risk management, and you were calm, cool, and collected during that whole process, that is the most important part about trading, is that you can remain calm under pressure. So just remember that you don't need to be active in the markets to be learning something. For me, I learned a whole lot more when I was sidelined because I had a neutral standpoint on the markets. So I didn't have a predetermined bias that I was married to. I wasn't looking for confirmation bias to give me reasons to stay in trade or to continue trading in a specific direction. When I'm in flow, I can very easily take a loss, turn my screen off, and come back the next day because I know that there's going to be another opportunity, which a lot of people can't get over. They can't get over the idea that they're going to miss a trade. All right, if you can force yourself to miss trades, say I'm not going to trade today, no matter what shows up, even if the A+ setup shows up, because what happens is you have this scarcity mindset. And scarcity mindset in trading is probably one of the worst things to have because you think you need to be in the markets all the time. You miss a move, you start chasing it. Or if you completely miss the move and you don't take a trade, now all of a sudden that next trade, right, you're carrying that burden with you and it's going to affect your decision making. So when you have an abundance mindset, you just realize that the markets aren't going anywhere. They're always going to be moving up and down. And there's always going to be an opportunity for you to find an asymmetrical risk reward opportunity. So for me, one of the biggest reasons that caused my burnout a lot of the times was just over trading and over leveraging, which led to revenge trading. And what I do is I keep a stack of poker chips on my desk, and maybe I only want to take 4 attempts throughout the week. Okay, if I use all those chips in one day, I can't trade for the rest of the week. I needed something visual to tell me that, hey, you are breaking your rules and you need to slow down, because that was the biggest heel in my trading. So if you have heels in your trading that are stopping you from seeing the progress that you want to see, you have to identify those quickly because those errors possibly cause burnout. All right, let's say if you're opening accounts and you're constantly full leveraging them, you're full margining your accounts, you're going to get tired of doing that after a while. And oftentimes, most people quit, okay? Most people come into trading, they oversize, they over leverage, they don't know really what they're doing, and they just blow their accounts up. But you have to think long term, okay? You have to understand that, again, this is a marathon, not a sprint. You're going to have more opportunities. You don't need to put all your chips on this one specific hand. There's going to be another hand that comes out. But if you don't have any more chips, if your mental capital is drained, you're not going to want to sit at the desk the next day. You might do it anyway. You might sit down at the desk and feel like you're actually learning something and improving because you're showing up. But yeah, the reality is that you're not improving. You're getting worse. You're gambling. and you're building bad habits. So my biggest advice to avoid burnout and tilt is when you're learning, just focus on one specific thing at first. And I talk about this all the time. I believe I got it from the Mental Game of Trading with Jared Tendler, is that people have an A game, a B game, and a C game. And they call it the inchworm method. And you know the way the inchworm moves is like the back end moves closer towards the front, and then the front moves, and then the back moves, and then the front moves. So the back is considered your C game. Okay, if you have a really hard time with over trading, fix the over trading first, right? Now all of a sudden your A game gets better and your B game gets better, right? Let's say if you're over leveraging at first, fix the sizing problem, okay? When you fix the sizing problem, your A game increases dramatically, okay? And that's extremely important to understand, is that when you are just getting into trading, or if you're struggling as a trader, maybe you've been trading in the markets for a very long time, like me, like I was trading for 5 years, didn't focus on any of my weaknesses, and I just kept running in place. So if you're in that position, focus on the thing that's holding you back the most, and you need to be able to identify that. I cannot identify that for you. I already know what the biggest pitfalls are for most traders, but you know, unless you're responding in the comment section, I have no idea what that is. It's a very personal thing, right? You versus you, me versus me, and you have to identify that on your own. Nobody else is really going to do that for you. I don't know if you're over leveraging. I don't know if you're over trading. I don't know if you're struggling with technical analysis, but a lot of people tend to focus on technical analysis when, in my opinion, that's probably one of the easier things to do. I think emotional control, risk management, and trade management are much more important than technical analysis. Because you could give an average technical strategy to an extremely profitable trader, and they're going to find a way to make it better just because of the way they operate around the markets, because of the way they manage their emotions properly, because of the way they size when the A+ setup appears. So also to reiterate, you need to make sure you're taking breaks and then you're structuring your day properly so that you're not in front of the markets for 24 hours a day. I think when I tried to learn, I spent way too much time in the markets, okay? I was trading, I was studying, I was going to work, I was looking at the markets at work. I didn't have any downtime, and I didn't retain any information that I learned. So reduce the frequency of the amount of trades that you're taking. Maybe take one trade a day, because that's the only way you can learn. I don't think anybody can learn taking 40 trades a day and journaling all those trades. There's no possible way. Okay, take one good quality trade, or one quality trade that you think is quality, and learn something from that experience. Okay, dive deep into that one specific execution and learn how you can improve that. Because again, the money comes from quality over quantity. So quality over quantity, make sure your study sessions are blocked off for a specific time of day. Okay, if you're working a 9 to 5, don't try and study at work, okay? Because now you're doing your job half-assed, you're doing trading half-assed, and there's really no way to improve properly if you do that. So only study on your downtime, okay? When you get back from work, set aside an hour, 2 hours every single day to study. Maybe you want to set an hour, 2 hours every day for only trading. Okay, maybe max 4 hours a day. Especially if you're working a full-time job, you have other responsibilities, because these markets are vampires. They will drain you of all the energy that you have. And if you don't know this by now, and you're likely to find out, is that more work in the markets does not necessarily produce better results. Some of my biggest days and my biggest months, I've barely had to work whatsoever. And that truly is a paradigm shift. It's like when you're working less, you can honestly earn more because you're more in flow with your systems. You understand that the time in the market is going to pay you rather than the frequency of you being in the market. So really, some of my biggest trades I've placed and I've gone to sleep and woken up in profits because I know that I'm not fiddling with the trade when I'm asleep. Okay, I'm not micromanaging it. I'm letting the trade pan out how it should, understanding that there's a specific level of uncertainty in the markets when I place a specific position. All I can do is place the position, assume that I'm going to take a loss on the trade, and let the market do what it's going to do, because at the end of the day, I can't control what it's going to do. So I hope you guys enjoyed this discussion on managing tilt, managing burnout, kind of how to avoid it. I don't think you can 100% avoid tilt and burnout. You just have to recognize it quickly and learn to take breaks. You know, when you feel your battery being drained and you're on E, you need to be able to charge up. You need to be able to, take a vacation. Go somewhere that's quiet. Go somewhere that doesn't have great cell service. That's one thing that I miss about living in New York is we used to go camping a lot, and where I used to go, kind of near where the original Woodstock was. So I used to just go there, stay in a tent, listen to the birds. The sun would wake me up. Like, it was such a relaxed feeling and extremely refreshing and motivating to be able to reset, not think about the markets all the time. Because I think if you're thinking about the markets all the time, that's an easy way to burn out. Okay, and if you're watching this and you're the type of person that places a position as a swing position, and now you're holding it overnight, but now all of a sudden you're in front of your screens all night long looking at it, watch the market tick up, tick down, tick up, tick down. And in reality, if you were to just leave the trade alone, maybe it would just go to your take profit, and there would be way less stress, there would be way less emotions attached to each up and down of the markets, and you're really trusting the process and trusting the system. So if you enjoyed this discussion and want to learn the step-by-step strategy that I used to make over $2.5 million, make sure you check out the free PDF link in the description, and I'll see you guys in the next one. Take care. Are you struggling to find the right routine as a trader? Now, when someone mentions seven-figure trading routine, you might think about supercars, watches, luxury vacations, but we all know that's not the reality. Now, if you've dabbled in trading at all, you've probably experienced something more along the lines of rolling out of bed in your pajamas, gluing yourself to the screens for the next 8 hours, and realize that you're just working a 9 to 5 in the comfort of your own home. But the daily routine for any trader plays such a massive role in our performance and profitability. And not having the right daily habits can mean the difference between making and losing vast sums of money. So that's why in this video, I'm going to share with you my everyday routine so you know exactly what it's like to live the life of a seven-figure trader. By the way, I'm Kyle, otherwise known as JCap. I'm a full-time trader who's withdrawn over $1 million from prop firms in the past few years. And on this channel, I share the strategies, processes, and tools I use in order to help you become a more successful trader. But enough talking, let's get right into the video. All right, this is a topic that in my opinion, has such a big impact on our trading that we oftentimes don't even realize, how much of an effect it has on our day-to-day performance. So in this video, we're going to just talk about what is it actually like to be a seven-figure trader. Right? It's not all glitz and glam. A lot of the times you're locked in your office, you're grinding, you're journaling, you're looking at data, things like that. All right. So I'm going to talk about typically what I do the prior day, my pre-market game plan, what I do during the trading session, journaling, reviewing, and then other daily habits. Right? These habits drive 90% of my performance. If I have a bad week, there's going to be parts of this routine that I'm just not keeping up on. Maybe I'm skipping a workout. And a lot of times those small habits, it does have an impact on our mental wellness as well as our physical. And we're just not in game shape when it comes to trading. And with trading, every day is game day. So you have to become prepared for that trading session or that trading week. You have to be able to reset at the end of each day, gather your thoughts, come to the next day, and really try and hit it out of the park again and again and again. And unlike any other performance sport out there, right, where maybe they're playing an 82 game season or even a 16 game season, something like that, with trading, right, there's really no days off unless you're taking off the major holidays. So in order to stay consistent, we have to be able to follow the same routines day in, day out, because if we don't have consistency here, we're going to see drastically different results when it comes to our trading performance. So yes, you might see on social media all these different things that is luring you into trading, right? Full-time trading is great. It gives you a ton of freedom, but often the day-to-day is not glamorized. And that's exactly what I'm going to talk about today, is having a proper professional schedule when it comes to trading. All right, so let's talk about our prior day or our pre-market day. So a good day for me starts the night before. So in the markets, proper preparation is key. It allows me to outline a trading plan for the next day or week, so I'm not surprised by price action. Earlier in my career, I would not have a plan. I would pretty much just show up at the charts and hope for the best. Right? I didn't have a plan. I didn't have any expectations of the market. And it does two things. All right. First of all, you're completely lost when it comes time to execute in the markets. And second of all, you don't even really know how to journal and learn from that experience because you never had expectations from the first place. So if you have an expectation coming into each week, I think the market's going to be bullish this week. Was I right or was I wrong? Instead of just, rocking up to the charts every day, sitting down,
and taking a position, punting a position that you didn't plan at all, there's nothing really you can learn from that. You're basically just gambling. Okay, so my day starts the night before. So at 7 p.m., I will sit down and review the markets for the daily close. The daily close is going to tell me a lot of different things. Is the market bullish? Is it bearish? Are we just retracing? Are we respecting levels that should be respected? So from that daily close, I'm going to mark out my higher time frame levels that are important to me. And it doesn't matter what system you're using, just making sure that you're looking at these higher time frames and understanding that those higher time frames will drive a lot of your intraday decision making. So I'm sitting down, I'm marking out my higher time frame levels, whether that's weekly levels, maybe it's the previous week's low or the previous week's high or mid-range, or maybe it's just the previous day, low, high, and mid-range. All right, those things that I do at the close is so important for me understanding, well, what do I actually want to do tomorrow? And what is my bias? What is my bias going into the next day? Then I'm going to review the calendar for any macroeconomic events that might pop up, just because I like to look at those events as, maybe there's going to be choppiness ahead of this specific news release, or maybe there's certain days that I want to avoid. Maybe there's a European bank holiday that I'm not aware of that I need to be aware of, right? Because it's going to affect the volatility of those specific markets. Then I'm going to identify intraday levels where a setup may form. Now, that's not required for you to do the night before. You can often show up an hour or two before the market open or before your trading session, identify those intraday levels. It shouldn't take you a whole lot of time to do this, guys. Don't spend too much time on your analysis, right? You need to be present and you need to not be burned out. And what happened to me a lot was I would sit down at night, analyze the charts, and then I would stay up all night watching the markets print, even though there was nothing going on. And by the time I sat down on my trading screen, I was burnt out. So avoid doing that. Make sure you're coming up to the charts refreshed every day. You get a good night's sleep. That is so important, all right? So again, good night starts the night before. This is just an example of what I typically do at the end of every day. I'm just marking out some key high levels, key high time frame levels that I'm looking at. And right now we're just going over the NASDAQ. So we have this old all-time high back here, and then we have this daily fair value gap, and we have this old swing low. If we drop down into the 4-hour, you guys can see that we were rejecting this low. So overall, I'm bullish. So are old lows and highs being respected? Yes. Are bullish and bearish fair value gaps being respected? Yes. Is market structure or daily closure suggesting bullishness? Now, this is a bearish closure, but based on the news event that's coming out tomorrow, all right, this is the Tuesday's close, and then Wednesday, the 11th, we have CPI. All right, so coming into CPI, which is Wednesday, I already see that the weekly candle has already traded lower. All right, and last week was bullish, so this I'm really just expecting as manipulation ahead of that news event. All right. So after I come to this conclusion, I have my daily buys for the day. Now you can do this pre-market, just come up with some sort of game plan for you to follow the next day.
Order filled.
Don't spend too much time on here. Either you're going to be right or you're going to be wrong. That's just part of trading. You're going to get, some months you're going to be 70% you're right at times, the other 30% you're wrong. And then other months it's going to be flipped. You're going to get 30% of the time correct and 70% of the time wrong. But the point is to not get so lost in the price action and the analysis, and more so focused on the process of doing this day in, day out. Yes, it's boring and monotonous once you get the hold of it, right? But once you're doing it properly, I guarantee you're going to have a lot more clarity in your trading. So now that I have my daily buys for the next day, am I going to find an opportunity to go long the following day? All right, so pre-market morning routine. I already had my plan from the previous night. Now, in the morning, as soon as I wake up, whatever the time that is, 6:30, 7 o'clock, I'll drink 16 ounces of water just as soon as you wake up. Don't go straight to caffeine. There's been studies of your brain not fully being awake before digesting that caffeine can have negative effects. So you want to be able to, drink some water as soon as you wake up, replenish your body in the morning before you have any caffeine. Give yourself some time to kickstart yourself before you actually eat breakfast as well. You want to be able to just kind of wake yourself up for a little
Order filled.
Whether that's, sitting on the patio, getting some fresh air, whatever you need to do. Then I'll typically have breakfast, coffee, just so I can have trade on a full stomach. I used to work out way earlier in the morning. So before this, I used to work out at 5 a.m. CrossFit. and it was so intense that it kind of ruined the rest of my day. So I had to switch it up. And now this is not going to, you don't have to follow this routine exactly, but I'm showing you guys how I structure my day typically. After breakfast, I'll go on a morning walk or meditation, get ready for the actual trading session itself. You need to have a clear mind. You can't be bringing, past trades into your new trading day. So even if you took losses yesterday, you have to be able to completely wipe that from your memory, right? Short-term memory, and move on to the next trade, because that last trade that you took has no impact on the one that you're going to take next. All right. So after the pre-market routine is done, we're basically ready to trade. Now, having the pre-market routine is so important. Don't just skip this. Don't just wake up and go straight to the charts. All right. I guarantee you're not going to have a good time. You're not going to have a good time because you're not thinking about the plan that you put in place. And not only that, but when you sit down in front of your screens in the morning, you have all those other things that you should have done previously that you're now thinking about. You're like, oh, I need to go on a walk. I need to meditate. I need to have breakfast. But now all of a sudden you're glued to the screen. All right, so make sure you get all of this stuff done and out of the way first before you sit down in front of the charts. Now my trading session. Typically, if I'm trading FX, I might be at the charts a little bit earlier. So, the news release is coming out at like 8:30 a.m. So we will actually see an example on the next trading session of possibly getting to the screens a little bit earlier, but just around this time window. So around 3 to 4 hours I'm dedicating to trading. Sometimes it's less. If I'm swing trading, I might only have to look at the charts for an hour before I can do something else. All right, so after we've identified the daily bias that we have, the next thing I'm doing when I sit down in front of my screen is what are the characteristics that I'm looking for intraday. So I need to identify if we've traded above or below the midnight open. Now, this is important because if you think about the majority of candles that close bullish, right, almost all of them, 95 to 99% of them have a lower wick. So if that daily candle is going to close bullish, it needs to trade lower first. I need to see that in price action. And if it doesn't, and I'm bullish, right, just based on my plan coming in the day, I don't have a trade. So I need to see it trade below that midnight open. And it's a bonus if it's still trading below that midnight open by the time I get to the charts. It's not required, but the best fill prices for the day will be below that midnight open. All right. Trust me. So if we have, I will then look for signatures in price that support my daily bias. And I ignore all the signatures in price that do not align with it. Now that means, if you're an ICT trader, if I'm bullish on the day, I'm ignoring any signals that are telling me bearish. And this is where so many traders mess up, because they sit down in front of the charts and they say, I'm going to be bullish today. They get in front of the screens and they see a sell signal. And what happens? You take the sell signal, and by the end of the day, you're a loser, right? You've taken a loss on that trade, and you kick yourself and say, you know what? If I just stuck to my game plan, I would have made money. Because when you're day trading, you're just trying to get in alignment with the higher time frame. The higher time frame is our daily bias. So if I'm bullish on the day, why am I selling when my plan is to be bullish? Right? In fact, you should see all those sell patterns fail. They should all fail. Every single sell pattern that you see on the day should fail if the day is going to close bullish. That means if you see a bearish fair value gap or a bearish order block or a bearish breaker, they should all fail and the market should continue rallying higher through all those levels. That's exactly what I'm looking for. And you can use those to your advantage, because oftentimes when those levels fail, it's providing you an opportunity to actually get long or bullish and trade in sync with your idea. Okay? Write this down, guys. Major keys. When I am bullish on the day, I am only looking for bullish signatures. And when I am bearish on the day, I am only looking for bearish signatures. Everything else is noise. Okay? Then I'm going to execute the trade based on one of those following ideas. Confluence is a bonus, right? We might have a liquidity raid and a fair value gap or an order block or optimal trade entry. Don't get too crazy. There's other concepts out there, but keep it very simple, right? This is so important. Just keep it simple, making sure that you're in line with the plan that you put in place the prior day or pre-market, and follow that plan thoroughly. I hate switching biases intraday. I rarely ever do that because it's gotten me in so much trouble. And I know there's a lot of traders out there that struggle with this. So if you have a problem with over trading and flipping biases intraday, just stick to one idea for the day. There's nothing wrong with getting the idea wrong on the day and coming back tomorrow. All right, there's always another opportunity. All right, so this is the intraday price action after we tapped into that daily fair value gap. So if you guys go back a couple slides, you can pause the video, go back, look at what I was looking at. This was the price action leading up into the CPI candle. All right, so we traded down into the daily fair value gap. All right, great. When I got to the charts this morning, what did we do? We took out the Asian range low already. So market has already traded below the midnight open. That's a positive. In here, we have liquidity raids. We have also sorts of other information in here that we can use to position ourselves long. Okay, so we have a liquidity raid here. We've got a market structure shift. We have some order blocks in here. We've got a liquidity raid. We have this inverted fair value gap that printed 5 minutes prior, or sorry, 15 minutes. This is a 15-minute chart. 15 minutes prior to the CPI release. Position myself long based on what I had already outlined the night before. I am not coming, rocking up to the charts and saying, ooh, sell signal, let me short this. No, I'm only looking for reasons to go long. And if anything, I'd rather take a position that doesn't look good, that didn't follow my entry criteria, but it's at least in the direction of my daily bias. Okay, at least I followed one rule. So after we get this expansion, right, what do we want to see? We want to see all these bearish levels be invalidated, right? We trade through a bearish fair value gap. We trade through a previous daily high. Not only that, but, just remove all this price action right here. And along with what we've seen already trading down into that daily fair value gap, taking out the Asian range low, seeing an inverted fair value gap ahead of that CPI candle, we also have all this price action leading up to the CPI is below the weekly open. So when you're following along for the week, just like I mentioned on the daily, the best fill prices for the day will occur below the midnight open. Just like the best fill prices for the week will occur where? Below the weekly open. Okay, if you're looking for a bullish candle on the week, the best prices that you're going to get is below the weekly open. So anybody buying this down here would be in profit right now. And it doesn't matter if you didn't have a stop loss, okay? You're getting a better fill down here from 21,300 all the way up till 21,650. Anybody getting filled down here is getting a better price on their long than anybody buying it above the open. Just like if you were to buy the market below this midnight opening price, you're getting a better fill than if you waited till up here. All right, there's nothing wrong with getting in late. Yes, you could trade after CPI, after we're kind of tapping into this fair value gap, but we are not taking this fair value gap short. Okay, if our higher time frame bias is long, do not take short setups into that. They will fail on you. You will lose tons of money doing that. All right, by the way, if you guys are looking to trade live with me, I called out this market pretty much, this market as well as the euro live in my Discord. So if you're looking to trade live with me every single week, ask me any question you want, be part of a great community. Just make sure you check out the link in the description. So this is my trading session pretty much to a T. I am planning out my trade in advance, and then I'm just looking for signatures that align with my model. All right, that's it. Keep it very simple. Then my post-trading routine, typically I'll wrap up whenever. So if I have trades that I'm going to swing, I'll just leave them alone. Sometimes if I'm swinging Forex or crypto, I'll leave those trades alone. Just close my trading terminals though, because you will get the urge. And this is something that I cannot help you with, but part of my routine, if I get stopped out once or twice on that specific trading idea, you have to close the terminal. Otherwise, it's going to feel like the screens are calling you back in and you go on autopilot mode. All of a sudden you get revenge. You get that FOMO, you get revenge trading that sneaks in. And, a really great practice that you guys all should do is after taking a loss, just go on a 10-minute walk, go on a 15-minute walk, clear your head, come back fresh, come back when you're not so emotional about taking the loss, and then think about maybe if you want to get back into a trade. But I would not just sit there and continue to click buttons, right? Close the terminals, make it a disciplinary habit where you're going to close the terminals and don't look at them for the rest of the day. If you can do that, give yourself a pat on the back every day and build consistency that way. Post-trading routine, I'll typically close off all my terminals and go straight to the cold plunge or sauna and have lunch. Sometimes these hours are a little bit earlier, so sometimes I might end at 11:30, go to the cold plunge sauna, and then have my lunch break. All right. Even during my lunch break, I try not to think about the markets. Otherwise, you're going to get that urge like, oh, I want to trade the PM session. Oh, I want to go back into the markets. You don't need to do that. All right, guys. There's so much opportunity. There's opportunities every single day. Doesn't matter how far the markets move, you will always find another opportunity. Okay. So once the lunch break is over, I'll go back straight into work-related tasks. So I might be working on YouTube videos. I might be working on my business. I might just be working on other things that are not trading, not trading related. I mean, sometimes they are trading related. Maybe I'm journaling. Maybe I'm doing other things, but I typically reserve the journal for the end of the day. All right, then around 4 to 5, I'll go hit a workout in the gym. Again, I used to work out in the morning, but sometimes the workouts were so intense that I was pretty burned out by the time I sat in front of the charts. So I kind of flipped it around. Not only that, but I feel like the workout at the end of the day is like a great way to close off my day, because then I get to eat dinner when I get home. I get to relax and unwind. And by then, I'm pretty burnt out. So I typically will work out in the PM. It could be different for all of you guys. So that's just my post-trading routine. All right. Now, evening journaling. This is really important. And this is something that I didn't do earlier in my career. And I kick myself about it all the time because I could have improved so much faster. Now, I still journal and I still think about these things, and I still take screenshots of all my trades, right? Because it's so important. Yes, this is pretty dry, and it's like, oh, that just sounds like a regular job. But you need to understand that this is what professional traders are doing, all right? We're not going on a yacht party when I need to get all this work done, all right? Even Umar Ashraf, spend some time with him in Dubai. He's working all the time. He barely made it out to dinner, all right? You can invite all these people to dinner or whatever you want to do. But if you actually invite somebody that's an actual trader, we're busy. We have stuff we have to get done. All right. Especially during the week when it's like market hours and I need to get all this stuff done. I need to journal my trades. I need to analyze what I did wrong. I need to prepare for the next day. This is a full-time job. If you want to make 7 figures, okay, there's somebody out there that's outperforming you. They're working on their edge when you're not. Okay, we're not just out here basically just willy-nilly just placing bets in the market. That's not what we're doing. Okay, so what I'll do is I'll write in all my trading executions. All right, TradeZell is great for this. I'll put in my screenshots. I'll tag my trades. So if I take a fair value gap or turtle soup or some other type of setup, I'm journaling all of that. Set up a playbook, making sure you're hitting all of those entry criteria. Then I'm writing down a summary of what happened. Okay, what did the market actually do? Couple screenshots of all the time frames, just so you can practice reading price action and analyzing and seeing if your trading plan aligned with what happened for that day. Let's say if you planned something and the trading day didn't pay